Welcome to this session. So we are going to deal with how to finance the energy transition in India in particular. And my name is Per Magnus Nysven. I am the chief analyst in Rystad Energy. I'm based in Oslo. And Rystad Energy is a business intelligence firm specializing in the energy sector. Together with me in the panel, I have Katan Hirakan. You are country manager for Société Générale Bank. I will call you an investment banker, but you do many things within banking. And then we have Rohit Gupta. You are head of the energy in DBS.
No, that's
No,
Rajasthan government.
yeah, Rajasthan RRCL. And that is a kind of authority. So you are dealing with the legal aspects and the planning of the project in Rajasthan, which is the state in India with the most solar panel installed. So
That's right.
yeah, very
Thank you.
relevant. And then we have. We have Subahu Kordia in the end here. You are from Edelweiss Alternative, CEO in Edelweiss, and you are dealing with securities, as far as I understand.
alternatives.
And and asset managers, capital
Alternative
asset
asset
managers. Yeah, and then from DBS. We have Sanli Weng, and you are dealing a lot with project finance, a lot in India. So it's a very qualified and senior panel. I think I will start with you, Katan. We have seen technology costs is coming down. Solar panel modules is down, everything is down, batteries come down. And the tariffs, electricity tariff is coming down. What do you think is driving this? Is this technology or is actually finance a part of why the tariffs are coming down?
Yeah, good afternoon, everybody. Thanks for the question. Clearly, as you already alluded to, technology costs have come down extremely significantly in the areas you mentioned. You know, solar modules, wind turbine. We've seen storage costs come down, a lot. Yet we're still seeing, certainly in a lot of the projects that the government are bidding, the playing field is very competitive. The tariffs being achieved are eye-wateringly low in some cases. So clearly, under a broad banner of financial optimization, a lot has been possible. And broadly, we sort of look. You'd look at two things, right? Firstly, is the cost of capital for that particular company, that particular developer. Second thing will be the sort of leverage that can be achieved in order to enhance equity returns and help put the developer in a position to bid very competitively. So we've really seen that a lot of the sort of juice, probably in the last year and a half, has come from the fact that the financing market has been very, very supportive. And I'll talk about it a little bit later as well. It's not just sort of traditional project finance. There have been other ways to lever up equity investments, which I think has actively happened in India. There's a lot of financial engineering that can happen sort of beyond the traditional project level, project SPV level as well. So like I said, I can come back to that. But I think the market has been very responsive. You've had domestic banks who have been very strong, but I think with the way regulations have evolved in areas both in terms of domestic financing, but also external commercial borrowing, that has really facilitated a larger entry of foreign banks into India. It's an asset class that they're comfortable with as well in terms of the development and the construction risk and then moving obviously into the operational life cycle as well. So it's played a big part. I'm happy to come back to talk about the various components of that a little bit later. But financial optimization, in our view, will continue to play a role in ensuring these tariffs are as competitive as possible.
So when we do LCOE calculations, where should we put the cost of capital, just from very broadly speaking?
Yeah, you can't say that because it depends obviously company to company, right? But I think a lot of people are looking to, these days it's more equity returns they're trying to achieve sort of in the teens. So I think you're looking at generally a double-digit number, apart from a few companies that have they can have very explicit state support, which allows them to borrow money domestically more, competitively. So you can't really land it at one number.
No. Okay, that was a good answer. I have to consider that it's a double digit for the equity side, and then it's quite leveraged, right? So the WACC is relatively low still, right? Yeah. And Rohit, in Rajasthan, you also have a net zero target in Rajasthan, and it requires a lot of financing to get there. So how do you finance the project in Rajasthan?
Thanks for the question. I think it really depends on the kind of project you are thinking of. So just to talk about numbers, we have about 42 gigawatt plus of installed renewable energy capacity, but about half of which is for the consumption of the state and half of which flows outside for the rest of the states and the country. So that really depends who's the off-taker, and the financing model works on that. But if going forward, if you look, the state has a target of installing about 125 gigawatt of renewable energy in the next 5 years, 10 gigawatt of storage, which is pump storage as well as battery storage, and then the associated the transmission infrastructure and the associated grid modernization efforts. We also have a large target of distributed renewable energy projects, which is currently we are about 10 gigawatt and we plan to add 5 gigawatt more. Now, so all these projects have a very different kind of financing model. So for example, for big projects, we look for development financial institutions, DFIs, ADB or World Bank, we work with them. So currently we are working with ADB for the grid modernization project in the state. But then you also do public-private partnerships. So big renewable energy generation projects, they are mostly on the public-private partnership basis where we provide land and, it's a private entity which brings in the financing. And then we also have the state corporations like, the state transmission company, the state generating company, or we as the solar park developers, the RREC and RSDCL. So here we are also thinking of exploring the financial markets. So for example, we are planning to roll out an InvIT for the state transmission infrastructure. And on the solar park development side, we are also, we are engaging. We have engaged a financial company to sort of, plan for going for equity market. So it's a whole range of, it's a whole suite of the financial arrangements. Yeah.
How many $1 billion are we talking about in Rajasthan only that goes into renewables and energy transition, or maybe only solar? It's a double-digit $1 billion number, I would guess.
Yes. So just to give you an idea, we are currently building a solar park. The bid is already on, which is about 2.5 gigawatt of renewable with 6.5 gigawatt of battery storage. The investment in that project itself is about $2 billion. So we have worked out some numbers. So if we have to meet our renewable energy targets and the pump storage targets, which I mentioned earlier, the number works out to about $70 to $80 billion. And that's that's the kind of infrastructure we need. But and you would be happy to know that in the last 1 year we have seen about the grounding of about 5 lakh crore, which I think is a substantially good number uh, of the projects which have been grounded, which includes nuclear battery storage as well as solar.
Yeah.
So
I can add some number, global number, because 2025, it was installed 530 gigawatt solar panels, and that was something like $450 billion. So you need to count in average 85 cents per watt installed in solar panels without batteries. And what is happening now is that you get more and more batteries. So I think that about in all the awarded solar panel projects in 25, it was distributed batteries included. So that's the way it's going, isn't it?
yeah, it is. So we have about 6 gigawatt hour of standalone battery storage projects already under execution, which is apart from the 6.5 gigawatt hour of battery storage in the solar park, which I mentioned. And now we are also planning to come up with a project of distributed battery storage, because you have all this distributed renewable energy flowing into the grid, and of late the challenge has been to balance that energy with the energy flowing from the large utility scale solar projects.
Yeah.
So you are right, as we go forward, a lot of fund will go in, a lot of money will be needed for battery storage.
Interesting market.
Yeah.
We sang.
Yes.
Can you be honest about the profitability and the returns on projects? Has it been good in the past, and what do you see going forward?
Typically, this is not unique to India. If you look at other countries, Japan, the implementation of renewable projects in particular, usually if you're in wave 1 or wave 2, the returns are obviously attractive, largely because of feed-in tariff regimes or other mechanisms that governments use or state agencies use to reach to accelerate the tipping point, right, for economies of scale to kick in. So generally, renewables has seen a steady form of infrastructure-like returns. It's just that I think it appears that the temperature or the excitement around that asset class has cooled down somewhat recently. I think it has gotten more realistic. I don't think it could have been a bit more euphoric in the past, where people expected it not just to be infrastructure-like, but also possibly a multiple play, where upon exit, they make X times MOIC and all that. But like Kotan said just now, we continue to see that well-structured projects, especially on the development side of things, in most countries, including India, what we're seeing is you can get, if you shape it right, mid to high teens on the development side. Obviously, on the operating side, you'll be looking at a lot more like low teens or high single, right? Depending on also your investment currency. Obviously, if it's the US dollars that you're pegging it to, then you've got to factor in the rupee depreciation. So generally, you see the maturation of the whole ecosystem of capital providers coming into places like India, because obviously the developers, the strategics, they will want that development premium, but the sovereign wealth funds and the pension funds, because there's so much to deploy, they are looking for a lot more fixed income-like returns, for which a deep market like India does present opportunities.
That was better returns than I expected to hear. So it's very promising for energy transition that you can actually get up to
We
meet
can
the
talk about
double-digit
challenges later,
returns.
but I'll start with I'll
very
start
good.
with a promising outlook for now.
Very good. And Subahu, you are CEO of Edelweiss Alternatives. And that is more public securities and capital asset management, if I understand that right. Could you say a little about the kind of macro environment and the power demand increase in India? I think we are at around 2,000 terawatt hours as we speak, and it has the potential to double in 20, 25 years if our numbers are realistic. Do you agree with those numbers? And what is driving this extreme growth of power demand going forward in India?
Yeah, yeah. So I think we uh, look at energy as one of the mega trends in India, right? And our belief is, and we do a lot of investment in energy sector, but our belief is that the India energy demand grows by about 7% on an annual basis, whereas the world energy demand grows at about 3 to 4%, right? With the base, what you just talked about, that means the incremental demand of energy is significant. And that cannot be just met out of renewable power. Renewable power will be a significant source of that energy demand to be met. Saying that, we have about 250, 300 million population, right? The number of people who are getting added to the population, which is an expectation by 2035. So there will be an increase in demand. There is a digitization happening in India, which is also increasing demand, data centers and digital. There is also the increase in the income, right? Middle class, the income is increasing, and that is also will lead to an increase in the demand of energy. So overall, from a demand perspective, the market looks quite exciting. And sometime I take back this analogy to US, which was in 1987-88, was about $4 trillion economy, and the average age of population of the same of India today. Right.
Yeah.
So what we have seen out there, and US is a service economy, right? Largely, India is the same. 65% of our GDP is service economy, but we are adding manufacturing. So directionally, we will see the similar amount of, or the same trend, what happened in US since 1987-88 till now.
And this 7%, what's the time horizon that we can see so high increase?
So this
of the-
7% plus has been there for a very, very long time in
Yeah,
India.
yeah.
It almost matches closer to what is India's GDP growth, right? And that is how electricity demand elasticity is linked to the GDP growth. So India has been doubling GDP every 6, 7, 8 years, right? On a PPP basis, the energy demand has been growing at 7% or 6% to 8, 9%. If you take data for last 5 years, 10 year, 15 year, 20 year. So that is expected to continue with the growth in India's GDP, the growth in the population, the growth in the middle class, and the consumption.
Yeah. And power in particular, I said that it can double. What do you think about that number?
Sorry, can you repeat
I said that the power, the electricity demand in India can double over 20 years. Is that possible, or is it realistic, or do you have any
If you
idea?
put 7% growth over, let's say, over 10 year on a compounding basis,
Yeah.
my view is that it should double in next 10, 12 years and not 20 years.
Yeah. Okay. So
Right?
maybe I thought that our forecast
and
was,
that is what has been happening. If you look at historically, the energy demand in India has been doubling every 12 odd years on an average.
Yeah.
Right. So I expect the trend to continue. With data center and EV infrastructure, which is where India is also investing a lot, and manufacturing, which is a focus for import substitution and the PLI scheme that the government has. I will not be surprised that if the growth happens much faster.
Okay, let's take a new round. Katan, you have been involved in LNG, I think. What do you think about that LNG market?
Thank you. You mean sort of interplay with renewables?
Yes, in a little kind of longer term, because I personally, I am a kind of, I think that the LNG market is going to grow, but for the short term, mid term, it's a little oversupply. But in the long run, I think it's. But do you have any ideas about when will this market tighten and?
Yes. So I think we're sort of. I mean, for as long as I was involved in that market, it's always been quite cyclical, mainly because supply comes on in such large chunks, and then clearly, even though you'll have contracted offtake in many instances, the ramp up takes time. The uncontracted part obviously has to be sold, and I think if you look, if you look at the global market, there's a very significant component now, and more than 40%, I think, that is sold on a either a kind of anything from medium term to short term to spot volumes, right? So that market very much aided by the aggregators who came in and basically said, we'll take the risk and we'll warehouse volumes until various markets develop. That changed the market. Obviously, the shale evolution in the US, that's really important because that fundamentally changed the way LNG was going to be produced and the way it was going to be, bought and sold. Now, if you kind of fast forward to today, clearly, Asia Pacific is still one of the key anchor markets. Europe has had obviously a tough time with the war, situation, and having to import more LNG from places like the US. So look, I think there will continue to be a degree of cyclicality, and if you think about what's coming online, kind of this year and next, from a combination of Qatar, US, and then there's a couple of very big projects in Canada. If all of that comes online, as forecast, then I think post 2027, again, we'll be in a very buyer-friendly market.
Okay.
And what I always predicted, I don't think it happened at the pace it has, and actually recently with all of the with the situation unfolding the way it is in the US and people clearly putting more focus back on gas development, more LNG projects. But I thought there'd be more of a sort of short to medium term market developing. So by that, I would mean sort of maybe 3 to 15 year type market. And that is there. As I said, you've still got a significant component of the market that is there. But we've seen buyers continue to underpin 20-year contracts. So all of these, if you've got a 2050 net zero target, then, you're very, very close to the cusp, of that. Clearly, one of the game changers is how all of this LNG is going to get developed, likely in conjunction with more carbon capture and underground storage as well, right? And I think there are several projects that are doing that. The economics of that still have to work out. So I still feel the jury's a little bit out. But it's clear that LNG will continue to play somewhat of a base load role in power.
For a very long time?
Well, I think the other dynamic is that countries like in Asia, you've got countries like Malaysia, Indonesia, that were historically big exporters of LNG, who have now turned into importing the product, as well. So some of it will clearly still underpin for a sustained period of time. And like I say, recent evidence has shown people still signing up, on a long-term basis. I guess the thesis that everyone was talking about is, the LNG interplay with renewables and sort of addressing the intermittency. Although I think don't overlook the development in India, right? Because India has got very far along the process of being able to provide round-the-clock power, right? So by combining, solar, wind, and battery storage, or in some cases pumped hydro storage, they really have developed these solutions very, very fast. So, is that thesis still completely valid? I think there's still a question mark on that. But again, if I come back, that's why I talked about the US evolution, is that LNG is obviously, with Henry Hub, where it's been for a while, if that stays low, then clearly sourcing LNG from the US is competitive. Plus, there remains a huge pricing arbitrage because of the inherent flexibility of being able to buy out of the US. And I think whilst the Qataris obviously want to maintain their very, very significant market share, I think they are also more receptive to having sort of more flexible contracting structures as well. So you're pushing me in a way in terms of the runway for LNG. It still looks quite significant. But, will it be done in conjunction, with more carbon capture? That's one of the things we'll have to see, and how much buyers attach importance to, sort of burnishing, if you like, the green credentials. I think all of these will play factors.
By the way, the Henry Hub is above 6 as we speak because of the winter storm, and there has been a crunch of the gas supply. So that is going to impact the LNG prices as well. Rohit, you have a good overview of all kind of how projects are financed. Private investments is of course very important. How do you attract private investments, and how do they perceive the risks in renewable projects?
Right. Thanks. I think for attracting the private investments, you really need to first establish the brand. Investors need to be, they first need to know about the investment opportunities which are available in the state. So we have been trying to do a lot of outreach events. Last year, we organized a mega global investment summit, which was inaugurated by an Honorable Prime Minister himself. And during that event, in the run-up to that event, we saw a large number of MOUs, assigned in the energy sector itself. So something to the tune of about 30 lakh crores. That's a huge number. But the question which I think is more important again is that how do you make sure that the risks are being covered? And if you look at the energy sector today, you can divide the risk into broadly three different categories. One is the operational risk of the project itself. So whether the developer will be able to get the land, whether there is a connectivity available, how fast the transmission infrastructure can be constructed. And we have been working a lot on that. The state has been very proactive in resolving right-of-way issues. We have been very proactive in providing land to the interested developers, so much so that we have also tweaked our policies to make it more easy. And also, then the state Solar Development Corporation is acquiring the land and then setting up the civil and electrical infra so that the developers can just come and plug and play their projects. So that's one part. And then the second is the off-taker who will take that project. And before we came on stage, we were all talking that there are so many bids which are there in the country, but they are finding it difficult to get the off-taker. And so we are trying to mitigate that. So the recent solar park project being the one example where we are procuring the power so that the off-taker risk is zero. And similarly for the other projects which are coming up in the state, we try to make sure that the offtake is assured, and alongside the offtake is the financial credibility that the payments will be made on time. So we have the payment security mechanisms, not just LC, but also setting up dedicated payment security funds. So some of the projects which we have done on different financing models like hybrid annuity models, we have even set up dedicated escrow funds so that, we park the money in there so that the developers can see that this is the money which will be used only for making those payments. And then I think are the broader issues which are related to the supply chain. And that's where a lot of focus is on establishing the domestic manufacturing industry. So just recently I visited one of the battery storage assembly units which has come up recently in the capital city of Rajasthan. But right now, most of these components are, for example, getting imported from our neighboring country. So I think going forward, there's a lot of focus which Government of India and also the state government has, so that supply chain risk is minimized, and we are providing special incentives to the manufacturing industry as well to set up the module, battery, cell manufacturing plants in the state.
Yeah. It's good that you mentioned manufacturing because it's quite potential for manufacturing in India, and I think that already you are manufacturing much more than you consume on solar panels. You actually export quite a lot of solar panels and even solar cells, but the wafers are coming from China still. Right?
Yes, the
But we have to
wafers
pass on to
Sure.
because I would like to know where this capital is going to be sourced from, whether it's India, rest of Asia, Europe, and America, and the amount of capital. If India is going to double energy demand and decarbonize at the same time, the capital we are talking about trillions of dollars, right, in a couple of decades from now. So where is that source, all this capital?
Okay. Thanks for that question, Per. I think what's been successful for India in terms of attracting investments have been what we've seen elsewhere as well, where especially for long-dated infrastructure projects, I would just put it succinctly as 3 Cs, right? The first C is obviously the commercial drivers must be there, especially for infrastructure projects, meaning that there is a real supply-demand gap that can be economically filled by the private sector. I think that's quite key, right? And in India, obviously, there exists that gap because of on the demand side, obviously, a burgeoning middle class. My colleague spoke about how power demand is increasing, et cetera, et cetera. The industrialization of India, made in India, turbocharged by the AI demand now, as well as geopolitics. And then on the supply side of things, yeah, that domestic supply chain that's increasingly being assembled more on the module side, but also increasingly on the cell and further upstream. And the country is just also naturally well endowed with especially rich solar resources. And although other countries, including mine, have rich solar resources, it's not just, you can't just have one duck in a row, you need three. And so you have rich solar resources, you have land, right? Asia Pacific next to Australia, you probably have the next big piece of land that can deploy these renewable projects. And then the third one, obviously, is that track record, right? Which I think the country obviously has exceeded its target of getting 50% non-fossil fuel ahead of time, right? So these drivers, commercial drivers, that's the first C. The second C is obviously contractual arrangements, right? For any long infrastructure projects, especially foreign investors like us, we want to see a place that has contractual arrangements that are sensibly allocating risk to the right parties, and obviously also a regime that respects contracts. Yep. And India ticks the box on both these things, especially the arrangements around SECI being the off-taker on a lot of these projects. That's been a game changer, as we were talking to some of my colleagues.
I see the time.
And then the third...
The time is, you have to leave the space.
Yeah, very quickly. The third C, obviously, is counterparty, right? Anything multiplied by zero is zero. So obviously, whoever signs these off-take agreements or these contractual arrangements must be a credible. I think that if you get these three aligned, the future is bright.
Yeah, we didn't get to hydrogen, but that will take a little time. But maybe it's just as good that we didn't get to hydrogen this year. We will come back to that later. Is that okay? Yeah. Okay. Thank you. Thank you. Great discussions. Thank you so much.
Thank you very much.
Thank you.